Hello everyone, I'm CA Neeraj B and welcome to my YouTube channel @Accounting Buddy NB. In this lesson, we will learn how to identify, analyze and correct accounting errors in a logical manner. We explain the types of errors that may not affect the trial balance, such as two-sided errors, errors of principal, errors of commission, complete omission, and double entry errors. We also cover the step-by-step process of locating errors when trial balance does not agree, and even more importantly, how to search for hidden errors when the trial balance still agrees. The lesson then explains the rectification before the preparation of trial balance, especially one-sided errors, and the correct approach to passing rectification entries. Practical illustrations are also discussed to help connect the concepts with real accounting situations. So sit back, relax, and watch the full video. Let us understand more about two-sided errors or errors not affecting the trial balance. Two sides error are the errors which do not affect the trial balance. It means such errors affect both debit and credit sides equally, as a result of which trial balance still agrees. Let us understand why such errors are dangerous. These errors are dangerous because even though the error exists, books appear correct, error remains hidden, and the financial statement becomes misleading. Let us learn more about two-sided errors which do not affect the trial balance with example. Error of principal is a two-sided error. For example, a machinery purchase for $10,000 recorded as repair expenses by the accountant. This is an error of accounting principle, as instead of debiting the machinery asset account, it is charged to a nominal expense account. As a result of this error, the wrong entry is passed. Debit expense account and credit the cash account for $10,000. Whereas the correct entry for this transaction is debit asset machinery account and credit cash account for $10,000. As a result of this wrong entry, trial balance will still agree as both the debit and the credit aspects of the entry are passed, but the classification of the accounts is wrong. The impact of this wrong entry will be that the profit is understated and the assets are also understated. Another example of two-sided error is error of commission. For example, a credit sale of $1,000 made to John posted to the account of James. The wrong entry passed is debit James account and credit sales account for $1,000, while the correct entry is debit John account and credit sales account for $1,000. The impact of this error is that though the sale is recorded correctly, while the debtors are wrong, however, the trial balance will still tally. Complete omission of entry is another type of two-sided errors which does not affect the trial balance. For example, a credit sale of $2,000 not recorded at all in the books. That means there is no debit and no credit aspect of this transaction which is recorded in the books of accounts. Therefore, the trial balance remains unaffected and it remains balanced. Duplication of entry is yet another two-sided, very common type of accounting error. For example, a purchase of $1,200 recorded twice. As a result of such an error, both debit and credit sides for this entry are recorded twice. Therefore, though there is an error, still the trial balance will agree. In this slide, let us learn step-by-step process to locate an error under various situations. Let us take case 1 when the trial balance does not agree and there is one-sided error. In such a situation, it means arithmetical or posting error exists. As step number 1, recheck the total of trial balance. Verify both debit and credit side totals and recalculate them carefully. Many errors are simply due to addition mistakes. Step 2 is to check the difference in amounts between the debit and the credit side of the trial balance. The difference is calculated by subtracting the credit side total from the debit side total of the trial balance. Now, if the difference is divisible by 2, the error is possibly due to posting to the wrong side. And if the difference is round figure, there is a possibility of a single entry missing. Step 3 is to check the complete list of sundry debtors and sundry creditors. Under this step, find out whether all the balances of debtors and creditors have been correctly written in the trial balance. Next step is to verify all ledger balances. Under this process, check each ledger account for correct totaling, correct closing balance, whether debit or credit, correct closing balance carried forward to the trial balance. Focus should be on cash account, bank account, and asset accounts. As a next step, check posting from books of original entry. Verify entries from sales book, purchase book, sales return book, purchase return book, and cash book. This step must ensure correct amounts are posted to the correct debit or credit side of the respective accounts. Next step is to check for partial posting. It is a common issue where entry is recorded in the journal and is posted to only one account. Rent paid in cash but not posted to the rent account is an example of partial posting. Another important step which must be followed is look for transposition errors. Check for digit reversed cases. For instance, $3,540 written as $3,450 resulting into the difference of $90. If difference is divisible by 9, there are high chances of transposition error. Other common steps which are usually followed to locate accounting errors include: if the errors remains undetected, try and find an account showing a balance equal to the difference of the trial balance. If the difference is big, the balances in the various accounts should be compared with the corresponding accounts in the previous year. Casting and carrying forward of subsidiary books should be checked again, especially if the difference is of $1, $10, $100, $1000, etc. If there is still a difference in the trial balance, a complete checking will be necessary. The posting of all the entries, including the opening entries, should be checked. Now let us understand step-by-step process to locate errors when trial balance agrees. Two-sided errors are dangerous as errors are hidden. First, review the transactions conceptually. While reviewing the transactions, ask whether the transactions are correctly classified and try and pick errors of principle, such as capital expenses treated as revenue and vice versa. As a second step, verify the ledger accounts in detail. Check each account for wrong name, wrong classification, and unusual balance. Third step could be comparing entries passed with the supporting documents such as invoices, contracts, purchase orders, delivery notes, etc. Ensure transactions have actually occurred and the amounts and the transaction nature are correctly recorded. As a next step, also check for omitted entries. Look for missing invoices, missing sales or purchase transactions, especially look for missing credit transactions. Another step which can be followed to locate errors when trial balance agrees is to identify the compensating errors. Such error could be found by looking at unusual patterns. Analyze expenses and compare them with previous year to find out very high or very low expenses. Profit of the business might look normal despite the lower sales could give you an indication of compensating errors. The classical example of compensating error could be when sales and the expenses are overstated or understated with the same amount. Analytical business performance review is yet another powerful way of locating errors when the trial balance agrees. Comparison of key business ratios like gross profit ratio, net profit ratio, and even the various cost elements of the business expenses trend are useful tools to find out that something is abnormally wrong and that calls for a deeper investigation. Reconciliation of key accounts also is an important step to locate accounting errors. Regular reconciliation of bank accounts, debtors subledger versus debtor control account reconciliation, and similarly the creditors subledger versus creditor control account reconciliation reveals the hidden errors. Cross verification of sales versus receivables, purchases versus payables, and inventory versus cost of goods sold also reveals and help in detecting accounting errors. We can sum up the professional approach to locate accounting errors into below 3 main steps. Step 1 is to check the arithmetical accuracy of the accounts by ensuring the trial balance matches. As second step, apply logical checks basis nature of accounting to ensure transactions are correctly recorded. And as a third step, apply analytical checks and use ratios and trends to locate accounting errors. Now let us summarize the strategy to locate accounting errors. If the trial balance is not tallied, take the arithmetic and posting checking approach. Now if the trial balance is matched, in such a situation, focus on conceptual and analytical review of accounts. To find out accounting errors, always rely on various account reconciliation and ratio analysis. Accounting errors must be rectified. Errors, whether affecting the trial balance or not, must be detected and corrected. The procedure followed to rectify the errors committed and to set right the accounting records is called the rectification of errors. The objective of rectifying errors are: prepare correct accounting records, ascertain correct net profit or loss for the accounting period by preparing the profit and loss account with correct figures, exhibiting a true and fair view of the financial position of the business at a particular date by preparing balance sheet with the correct accounting data. Now let us understand the rectification of errors before preparation of trial balance. First, we will learn about the errors which affect only one account or one-sided errors. Errors which affect the agreement of the trial balance, that is, because of which the trial balance does not agree, are called one-sided errors. If the errors are identified before preparing the trial balance, they are rectified by giving explanatory note. They are rectified by debiting the concerned account for short debit or excess credit and by crediting the concerned account for short credit or excess debit. In the accounting process, errors may occur while recording the transaction, posting to the ledger, balancing accounts. When such errors are identified before the preparation of the trial balance, they can be corrected immediately in the concerned account without requiring a suspense account. Let us learn more about one-sided errors. These are errors that affect only one account or it affects only one side, either debit or credit side of an accounting entry. As a result, the trial balance will not agree if these errors remain uncorrected. Key principle of rectification of such one-sided errors are: such errors are rectified by debiting the concerned account for short debits or excess credit, or by crediting the concerned account for short credit or excess debit. Now let us understand the logic of rectifying one-sided errors. If amount is short debited, then the rectification will be done by debiting the account which is earlier short debited. Now if the account is debited wrongly with excess amount, such one-sided error will be corrected by crediting the same account with excess amount debited earlier. Similarly, if an account is short credited, it will be rectified now by crediting with the amount which was short credited earlier. Now, if the account is credited with excess amount, it will be rectified by now debiting with the amount which was excess credited earlier. In this slide, we will further understand errors which affect only one account or one-sided errors with examples. First such error is error of partial posting. For example, a retail business pays shop rent of $2,000. Entry is recorded on the credit side of the cash book, but it is not posted to the rent account. The impact of this error is that rent expense is short booked and the trial balance will not tally. Such an error will be rectified by debiting the rent account by $2,000 and by writing a proper narration. Another one-sided error is when one side of the entry is posted with wrong amount. For example, a purchase of raw material for $5,000 is recorded correctly but posted to the supplier account as $4,500. The impact of this error is that the creditor is understated by $500 and there will be a difference of $500 in the trial balance. This one-sided error of wrong amount will be rectified by debiting the supplier account by $500 and also by writing the proper narration.
Another type of error is error of casting, which means totaling mistake. For example, a wholesale trader totals its purchase book and the correct total balance of $25,000 is wrongly recorded as $23,000. The impact of this error is that purchases are understated by $2,000 and therefore there will be a difference of $2,000 in the trial balance. This error is rectified by debiting purchase account for $2,000 and writing the narration being purchases under casting now corrected. Another type of error could be error in carrying forward of account balance. For example, the actual closing balance of cash book amounting to $10,500 is wrongly carried forward as $10,050. The impact of such an error is that cash balance is understated by $450 and there will be a difference of $450 in the trial balance. This error is rectified by debiting the cash account with $450 and by writing the proper narration for the rectification. Another type of error is error of balancing. For example, a debtor's account correct closing balance is $3,200. However, by mistake, it has been taken as $2,800. As a result of this error, the debtors are understated by $400. Such an error is rectified by debiting the debtor's account by $400. Next type of error is posting to wrong side. For example, a payment of $1,000 is made to a supplier in cash. The correct entry of this transaction is debit supplier account and credit cash account. However, by mistake, the supplier account is credited again instead of debiting it. The impact of such an error is that supplier account is overstated on the credit side. The rectification entry of such an error will be that the supplier account will be debited by $2,000. $1,000 is debited to nullify the wrong credit of $1,000 and another 1,000 is debited for the cash paid to the supplier. Let us further understand one-sided error with an example. How will the following errors rectified in the books of Tolly Trading LLC if suspense account does not exist? Error T1 is purchase book is undercasted by $3,500. Let us understand this error. Purchase book has been undercasted by $3,500, which means that the purchase account has been short debited by $3,500. In order to correct this error, purchase account should be debited by $3,500 since it was earlier short debited. The rectification will be recorded in the purchase book as displayed on your screens. An amount of $3,500 will be recorded on the debit side of the purchase account by writing to undercasting of purchase account for the month of so and so, and it will be written in the particulars columns of the purchase account. Error number T2 is return inward book is understated by $1,200. That means Due to this error, the returns inward account has been posted short, that is, short debited by $1,200. The account should therefore be debited by $1,200 to rectify this error. The rectification entry will be recorded in the return inward account as displayed on your screens. An amount of $1,200 will be recorded on the debit side by writing the words to undercasting of return inward book for the month of, and we need to write the month to which it belongs, and it will be written under the particulars column. Error number T3 is a depreciation amount of $750 on furniture not debited in the depreciation account. Due to this error, an amount of $750 is less debited to the depreciation account. Therefore, an entry of $750 will be posted on the debit side of the depreciation account to correct this error. The rectification will be recorded in the depreciation account as displayed on your screens. An amount of $750 will be recorded on the debit side of the depreciation account by writing the words to omission of posting of depreciation. Let us take another example. Rectify the following errors which are detected before preparation of trial balance. Error T4 is sale of $30,000 posted in the account of Tolly Trading LLC as $3,000. As a result of this error, Tolly Trading LLC account is debited by $3,000 against $30,000. Hence, a further debit of $27,000 is required. This error will be rectified by writing a note on the debit side of Tolly Trading LLC account. The rectification entry will be recorded for $27,000 on the debit side of Tolly Trading LLC account by writing the words to short debit for sales error rectified in the particulars column. Error T5 is sale of $20,000 to Rolly Trading LLC credited to his account as $2,000. As a result of this error in Rolly's account, two mistakes have happened. As it is a credit sales transaction, Rolly's account should have been debited by $20,000. But instead of debiting it, it is credited by $2,000. Therefore, one wrong credit of $2,000 has to be cancelled by debiting Rolly Trading LLC account for $2,000, and a debit entry of $20,000 has to be posted to Rolly Trading LLC account for the credit sales. The rectification entry will be recorded in the Rolly Trading LLC account for $22,000 on the debit side by writing to error rectified for credit sales in the particulars column.
If you enjoy the content of my channel and appreciate my teaching style, please subscribe, share and like my YouTube channel @AccountingBuddyNB. Thank you and goodbye for now.